I'm 680 News Senior Business Editor Mike Eppel. We had two more Canadian banks report quarterly results today. One was raising the quarterly dividend payment to shareholders in a better than forecast quarter. And the other, well, it saw its stock price take a little bit of a nosedive today as it reported earnings that fell short of estimates. Bank of Montreal made $1.5 billion profit in its third quarter. It's a big number, but it saw slowing momentum at its U.S. operations, and it was setting aside more money to cover potentially bad loans. And that news, along with the fact the BMO did not raise its dividend, sent the stock price down by 4% today on the TSX. And over the past 12 months, it is now down by 13%. Scotiabank, meantime, made over $2 billion in profit in its third quarter, and the results were better than expected as its international operations helped offset some of the credit provisions. At the same time, Scotiabank's Canadian division was also growing, and it's raising its dividend payment to shareholders by 3.5%. So shares of the Scotiabank, one of the better performers on the TSX today, up by a couple of percent, but still over the past year down by close to 7%. Well, back in 2008, Altria spun off Philip Morris International. At the time, it was looking to unlock the value of a fast-growing business in the tobacco industry. That was then. This is now. Today, Altria and Philip Morris International announced that they are in talks to get back together in a merger that could be worth upwards of $210 billion. Slowing sales in the tobacco industry globally have these two companies joining forces potentially. The stock price is moving significantly on Wall Street. Shares of Altria were picking up about 6%, while Philip Morris saw one of the biggest declines in recent memory. And that deal between Air Canada and Air Transat could take a little bit longer than many shareholders thought to get regulatory approval. Transport Minister Marc Garneau saying because of the competitive issues that the buyout of Air Transat poses for Canadian consumers, it could take upwards until next May before all of the public and regulatory review has been completed. That merger, because it also includes transatlantic routes, will also require European regulatory approval. Shares of Transat have been trading well below the actual buyout price of $18 per share, in and around $15.75 on the TSX. From the 680 Newsroom, I'm Mike Eppel for City News.